Hello traders, welcome again to another video. In this video we're going to be breaking down the 361 trading model, and previously I talked about trading effectively. I hope you guys were able to check that video. It's a very important video that's going to help you transform your trading to the next zone. So that being said, I want us to focus on the breakdown of the 361 model. Now before I break down, I would like you I'd like to show you guys, or to let you guys know, why the 3-2-1 model works. Now, the first reason why it works is because it aligns with how smart money flow works. And the way smart money flow works is that liquidity is collected first, then traders get tricked into the wrong direction, which is the second leg 2. Then the true direction unfolds, which is now 1. Now, this model is mechanical and repeatable and quite easy. Not actually quite easy, so easy. And I'm going to be using an indicator right here, which you guys can as well use. And this video is for those traders who still do not have a consistently profitable strategies. Remember, this channel is dedicated to helping traders psychologically and with the even technical analysis, how to read price and strategies and just anything that can help traders become better. This channel is dedicated to doing that. So that being said, make sure you hit the subscribe button and like the video. So once I've already told you guys why this model works, because it aligns with the smart money, order flow. And now we're going to be starting with the work. Now, the 3-2-1 model is a precision execution model built around 3 core ideas. Now, I'm going to be having 3. Then I'm going to be having 2. Then I'm going to be having 1 there. Okay? I want you guys to pay close attention. This is not hard. And I want to ensure that everyone gets to understand what I'm talking about. I'm not going to go so fast and, people. But if you have to watch this video over and over again, just do so. Okay? So, every candle, every session, every asset is always in either one of these. Okay? Now, when you talk about the 3, the first thing you gotta do, first of all, is that you have to identify where you are. That is where 3 is. Okay? Now, for example, where you are is always gonna be either accumulation, manipulation, or distribution. For those who trade ICT or who has been students of ICT, I think by now you understand these smart money concepts. Accumulation, manipulation, distribution. Every candle, every session, and every asset is always either one of these. It can never be 2 at the same time of this. It is either accumulation, it is either manipulation or distribution. So your role as a trader, for you to trade this model, perfectly, you have to understand, first of all, where are you? You have to identify: are you in accumulation? Are you in manipulation? Are you in distribution? And I'm going to be using an indicator here that's going to help you guys to be able to make it easier for you guys to mark those accumulation, distribution, and so on. So by now, I think you already understand that most of the time Asian session is usually accumulation, then sometimes London comes in and manipulate, then New York distributes. And sometimes it doesn't usually happen always like this. Sometimes Asian session will just be distribution or just expansion, meaning that now London will now start accumulating. Then now when New York comes in, New York will just reverse what was done earlier. So that is a way more advanced part that I really don't want to get into right now. But as of now, I just want you guys to pay attention to the accumulation, manipulation, distribution. So in accumulation, most of the time, the process is just, compressing and liquidity is being collected. And let me now introduce this indicator so that you guys, this indicator is called ICT kill zones. It is one of the indicators that I think is being used globally with a lot of traders. So far, I think it's over 33,000 traders are using this indicator. That shows how powerful it is. And for us to be able to use it effectively, I'm going to go into, let me go into 5 minutes. Let me go into 5 minutes, or should I go into maybe 15? Because I think 15 will give me a bigger view. Yes, into 15. So this is how the indicator looks like. This is how the indicator looks like. I would like to remove some things from this indicator. Okay. What am I gonna be removing here? I'd like to remove first of all these pivots. I don't like them. I want these charts to be, I want them to be a little bit clean. Yes, I've removed them. So this is the indicator. It indicates the Asian, London, and New York. And there's also another indicator that also, goes deeper into indicating like the PM session, and for example, actually, it is this one right here. We have the lunch, we have the PM, then Asian again. This is the AM session of New York, and this is the London, this is the Asian. Okay, and now this is Wednesday. Okay, this is Wednesday. I'd like to use this. Let me use this one as an example. I've just picked it randomly. I can use any other day. We can even go through this one, but I think this is a perfect example. So Asian session most of the time is just accumulation. So if you do not know how to mark your Asian range, you can just go and search for the indicators. This indicator is called ICT kill zone. Once you put it in your, remember guys, I'm using UTC +3. So don't be confused when your time zone is different with mine. It is all the same thing. I'm using UTC +3. Note that. So when you hear me talking about a time that is not really compatible with whatever you're seeing on your chart, just know that I'm using a different time zone. So either you can switch to mine or just use whatever you have. It is all the same thing. So let's talk about the accumulation. So accumulation most of the time is just the build-up phase. It is price being compressed. Price is compressing, liquidity is being collected. Then after that, we come to the manipulation, the sweep. Okay. Now price attacks an obvious high or low. Then after that, after taking the liquidity, now distribution now begins. Okay. So in this scenario, when people came into New York session, this was now New York, which started around, let's assume 16:30, which is like 9:30 in the morning. This New York session was beginning right here. Okay. So before you even do anything here, there's another video I did about daily bias, understanding daily bias, because if you're doing all these things and you don't understand the daily bias, where the market is going to, like you don't understand the previous day candle, how it closed, then there's a possibility you're gonna go into a loss. And that's why maybe this one failed here. But I'm also gonna use it as an example if given the time, because I don't want this video to be too long. So once you understand that we're bullish in this day, so meaning that we're looking for buys, we have had liquidity taken from this Asian session. You see that liquidity has been taken here. Then we've had a displacement, creating a bullish 15 minutes fair value gap. Let me mark it. This one here. Okay. Then now, assuming that you're a New York trader and you're coming in and you're seeing, okay, we already had all this happening. So if it were me, the way I usually trade, I would like price to come down back, take liquidity below this London session as it taps this bullish 15-minute fair value gap. And this is the perfect, let me tell you guys, this is my secret. This is the perfect entry ever. When you have a liquidity lying above liquidity, it is so perfect, guys. When you have liquidity lying above liquidity, because we have liquidity lying here of London session, London, then we also have liquidity of a PDRA of bullish 15-minute fair value gap, meaning that price has no reason to go against this, because if we violate this, meaning that we are interested in taking something lower, but already something lower here was already taken. But unfortunately, as you can see, I did not get that entry that day. I never got it. Price just went on to deliver. Okay. Now, assuming that I was trading during the London session, then I would have gotten an entry here, and just New York I'd be just waiting for price to continue to deliver. So literally, what would have happened here is during London session. Now, if I move into 5 minutes, just to get a clearer picture, now for us to be able to, sometimes you have to move into those lower time frames to give you better understanding of what price is doing. As you can see, we took liquidity. This was now the liquidity sweep. This was the accumulation. After the liquidity sweep, we had this displacement. Price closed above this high here, this high. That already shows that there's a change in direction. And apart from that, it did not just close, it displaced, creating this bullish fair value gap. And as you can see, it is as well on 5 minutes time frame. So all you have to do, all you had to do is wait for price to come down here. Then you go higher, which it did, but really never tapped where I would like it to tap. But still, you'd have just buy it from there. You put your stop loss below this one here and let it run. And you see, if I was trading London, this is how I would have ended here. And this is how they trade. This is what happened with gold that day. Okay. Now, this is just to show you guys how accumulation, manipulation, and distribution work. This was accumulation, manipulation, then this all phase of distribution. This is all part of distribution. Though I would really love market, to come down again and, do some manipulation here. Sometimes it does not do that, but sometimes it does. And it is part of trading. Nothing is perfect in this game. So you just have to accept that sometimes you're going to miss entries. Sometimes you're not going to trade. And that's just part of it. Okay? So you guys have seen what I'm literally talking about here. The manipulation is the sweep of liquidity. Price attacks these obvious lows here. Remember that our daily bias is bullish. We've already confirmed that. Our daily bias is bullish. I'm not really going to go into daily bias right now to take a look on the daily time frame on how it closed and why we were supposed to be going higher. That is on another video. If I do that right now, this video is going to be too long. Then we have the distribution phase, which is most of the cases, it is usually either New York or sometimes even London. But given that London did not distribute, as you can see, London was also more of just accumulation. You see, that's why I was saying that I would really love to see price attacking this London lows here. But because London was more of accumulation too. So distribution was yet pending. So if distribution is pending, then we expect New York to do that distribution. And as you can see, New York came in and distribution happened. Price was delivered. And it was delivered on a marked PDRA. This was, I think, a bearish PDRA that I had marked on the daily time frame. This was on a previous video. So I'm not going to go into that right now. Now, something also I want you guys to understand is that you never trade all the three. You only trade distribution. I'm going to repeat it again, guys. You don't trade all these three at once. You only trade distribution. Why should you trade accumulation? Why should you trade manipulation? Like, what is it exactly that you're gonna be trading in my like manipulation right here? Like, I'm struggling to to even get the sense of it. Why should you trade manipulation down here? Because it is just the move is even not even making sense. You see, we swiftly, come down there and price goes back and closing bodies in there and before we. So we trade distribution. So distribution has already happened here. Now this is the distribution leg. All this is distribution. Okay. So we don't trade manipulation and accumulation. We just trade distribution with this model. Okay. Now we're gonna go with the market. Let me go to 5 minutes. We're gonna go with the two confirmations before entry. Two confirmations before entry. Literally, I've already spoken about this earlier, but let me just repeat it. So the two confirmation, first of all, once the manipulation happens, you need two confirmations. So manipulation has happened here. So the two confirmation, first thing you need here is this one. Market structure shift. We can call it MSS, or we can call it change in character of change. Huh? What am I even doing? Okay. So this one here. So the moment price break this internal structure in the direction of the anticipated move, because we were bullish, so we were expecting us to go higher. So once we break here, and this is now what we call a market, market structure shift, or you can call it in change of a character, depending on how you want to call it. That is the first confirmation. Now, the second confirmation is a fair value gap or an order block. I'm not going into the order block. I barely use, order blocks and so on, but they have to be inside the sweep range. Okay? Sweep range, this is the sweeping range. You see from here to here, this is the sweep range. So we have a gap here. Yes, an order block is also, but I'm not really going to go into the factor of order blocks and so on. Fair value gaps are enough. If you're using fair value gaps, just use them. If you're using order blocks, just use, because if you start confusing, you want to use both, you're going to get confused, because sometimes they antagonize each other. So I go with the most powerful one, which is the fair value gap. So as you can see, we had a fair value gap here. So you wait for price to come into the imbalance, which is the fair value gap, or the order block. Then you do what? You buy. That's why I was putting this buys, like this entry right here. And now you target the opposing liquidity. Targeting the opposing liquidity meaning that you would target this high. And as for me, I was because I knew that New York was coming to to do that expansive move and so on. So I knew that the next target would have been this daily PDRA, which was not really closed during that day. But I usually close my trades whenever it reaches this point. So meaning that if once it was a few minutes to the closing hour, I just close them, and that will be already 1 to 15 hour. Okay, that is how you do these things, guys. And you see the reward ratio, guys. If you can just time one trade, like you don't even need to trade every day, just one trade, even a week, but you get 1 to 15 hour. You risk one, you get 15 hours. So you have 15% returns in a single week with just one single trade. You see, now that's the power of less trades. But if you keep on taking random trades, those trades that are not really, giving good returns, then you're just wasting time. So on the one shot execution, this is the one shot execution. There's nothing like waiting for another re-entry and so on. Just this the one shot. Once it's here, take that one shot, walk away. One refined entry, one stop loss, one take profit or objective, and that's it. This will protect you from revenge trading, of waiting, re-entering. This model is so easy and will just help you stay away from blowing your accounts. Now, I'm going to go again for the last time on how to use this model. Look for the previous session, for example, Asian high or lows. If we are bullish, we are targeting the Asian lows to be taken. Then once they're taken, now we switch to 5 minutes or 15 minutes. Look for change in change of state of delivery with a fair value gap. We enter on the fair value gap, then we target those highs, and that's just it. Now, when you talk about refinery, you can always find ways on how to refining your entries. Everybody has their own ways of refining their entries. To me, this is my most powerful one. And that's just about it, guys. The 3, 2, 1 model. So I hope you guys have paid attention. In other terms, it isn't different from Judas swing. It is not so different from the silver bull and so on. It's actually just the same thing repeating over and over again. That being said, guys, I don't want this video to be more than 20 minutes as usual. So I'll see you in the next one. I hope this one was helpful. And in case you do not understand something, leave a question and I'll be able to see a way of helping you guys out. Cheers. See you in the next one.